Imagine a company not just making things, but actually building the literal backbone of modern infrastructure, from pipes deep underground to the huge structures in new cities. Today, we're taking a deep dive into exactly that kind of company, JTL Industries Ltd.
That's right.
We're going to be unpacking their unaudited financial results for the first quarter, the one that ended June 30, 2025. We've got their investor presentation, the earnings release, board meeting notes, basically all the key documents.
Yeah, the full picture.
And our mission here is to really understand, what are these numbers, these new strategies? What do they tell us about how JTL is doing? They've got some surprising new ventures and, frankly, some really bold plans.
Definitely some bold moves in there.
So whether you're someone who tracks industrial growth, or maybe you're just curious about how infrastructure spending shapes things, or perhaps you just enjoy seeing how companies handle these market cycles, well, you're in for some pretty fascinating insights today. Okay, let's dig in.
Okay, so Q1 of fiscal 26. Management's commentary, it highlights what they're calling green shoots, early positive sign.
Green shoots. Okay. So what does that actually mean for JTL?
Well, it means they're seeing things pick up. They're launching new products, pushing ahead with some pretty significant capacity expansions. It signals, a forward-looking approach right at the start of the year.
And those green shoots, they definitely showed up in the volume numbers, didn't they?
Oh, absolutely. JTL hit its highest ever quarterly sales volume. We're talking 108,406 metric tons.
Wow, that's huge.
It is. That's a solid 26.5% jump year over year, and even more striking, 32.4% growth just from the previous quarter.
Okay, quarter-over-quarter growth of over 30%.
Yeah.
That's really something.
It really is, and it's worth pointing out, JTL Engineering, that's the company formerly known as Nabha Steel and Metals, they played a big part.
Right.
They contributed 16,280 metric tons to that total consolidated sales volume.
Got it. So strong volume across the board. How did that translate to the top line, the revenue?
Well, that volume growth definitely pushed revenue up. Total revenue from operations came in at $5,439 million, which is a nice 15.85% increase quarter over quarter and about 5.5% growth compared to the same quarter last year.
Okay, so volume and revenue looking pretty good on the surface.
Yeah.
But, the real story often comes down to profitability. How did their earnings shape up? Especially, considering the market conditions.
Yeah, that's where it gets interesting. So EBITDA, that's earnings before interest, taxes, depreciation, amortization, basically core operating profit.
Wow.
That showed strong quarter-over-quarter growth. It was $234 million, up over 31%, which is good.
That sounds encouraging.
It is on a Q-o-Q basis, but the year-over-year picture, well, tells a different story. EBITDA actually saw a 41.56% decline compared to last year.
Oh, wow. That's a big drop.
It is. And net profit, or PAT-T, that also declined significantly year-over-year by 46.90%, landing at $165 million.
Okay, so QOQ growth is strong, but your profits are way down. How do we square that?
Context is key here. The managing director specifically mentioned this performance showed resilience, and here's the crucial part. Considering the down cycle in the steel industry.
Ah, okay. The steel down cycle. That's really important context, isn't it? Especially in a cyclical business like steel.
Exactly.
What does that down cycle typically mean, and why would JTL still be considered resilient, even with those big yo-why profit drops?
Well, in a down cycle, you usually see weaker demand across the industry, steel prices tend to soften, and margins get squeezed for pretty much everyone.
Makes sense.
So the fact that JTL is showing this kind of record volume growth, and even that quarter-over-quarter profit jump, suggests they're doing something right despite the tough market, maybe gaining market share, maybe benefiting from specific projects, or perhaps managing their costs really effectively. That's the resilience part.
Got it. So navigating a tough environment better than expected, perhaps? What about their actual margins, the efficiency metrics?
Right. So their EBITDA margin for the quarter was 4.3%. Now, that's actually up 50 basis points, 0.5% from the previous quarter. So better operational efficiency QOQ.
Okay, an improvement there.
Yes. But the PAT margin, the net profit margin, was 3.0%, and that was down slightly, about 51 basis points quarter over quarter. And another key metric, operational EBITDA per ton, basically how much profit they make on each ton they sell, that stood at 2,322. It shows they're still managing to convert sales into profit, even with the market headwinds.
Okay, so that paints a clearer picture. Now, beyond these core financials, JTL is also making some, well, Pretty fascinating strategic moves. They're actually getting into a completely new metal.
Exactly. And this isn't just, a minor tweak. JTL successfully produced its very first batch of ultra-thin brass foil. We're talking 0.04 millimeters thick.
0.04 millimeters. That's incredibly thin.
It is. And they did this through a strategic job work partnership, which is an interesting way to enter a new field.
In brass foil. That's not your typical construction material, is it? What's it used for?
No, definitely not. This is a highly specialized product. It's valued for things like low friction, corrosion resistance, very specific properties.
Okay, so where would you use something like that?
High precision areas. Think EMI R5 shielding, protecting electronics from interference. Components for defense-grade ammunition. Things like grounding, sensing applications, thermal control, specialized gaskets and shims.
Wow, okay. That sounds like a completely different ballgame from steel pipes. High-tech stuff.
It really is. This move potentially puts JTL into a niche, high-demand market where there isn't a ton of competition.
Right.
It's a clear diversification move, diversifying their product mix, aiming for potentially higher margins in these specialty segments, and strategically reducing their reliance just on steel alloys. That helps cushion them if the main steel market hits a downturn.
And you mentioned defense applications.
Yes, they explicitly stated plans are underway to start supplying the defense sector in the coming months. That's a significant strategic move, given the quality and security requirements involved.
That is a huge leap from traditional steel pipes. But just to clarify, they aren't abandoning their core business, right? They're still expanding in high-grade pipes, too.
Oh, absolutely not. They're doing both. Alongside the brass foil venture, JTL announced a major capacity expansion for pipes, a new electric resistance welded or ERW pipe manufacturing line.
ERW pipes.
Okay. And this line is specifically designed to serve the ASTM API grade pipe market. Those are stringent international standards.
Right, the kind needed for serious infrastructure projects.
Exactly. Think oil and gas pipelines, major water transmission lines, city gas distribution networks. These segments typically command better EBITDA margins because of the high quality and safety standards required.
And this brass foil thing, is it expected to be a big revenue driver soon, or is it more like dipping a toe in the water with that job work partnership?
That's a good question about the balance. Yes, the job work model for the brass foil suggests, a cautious entry. Test the market, build capability without a massive upfront investment. It lets them scale up more thoughtfully as they secure demand, especially those potential defense contracts. It's definitely positioned as a long-term strategic play, but one they're actively pursuing now.
So it's a natural progression in the pipe business towards higher specs,
Yeah.
while simultaneously exploring this completely new high-tech material.
Precisely. It positions JTL among a select group of Indian manufacturers who can make these large-diameter API-compliant pipes. Combine that with their existing, already huge range of over 500 SKUs. They're clearly aiming for leadership, ready for future demands.
And underpinning all this seems to be some strong operational execution. You mentioned value-added products earlier.
Yes, VAP, or value-added products. They're playing a bigger role. This quarter, they contributed 20% to the total sales mix.
20%. How does that compare?
That's a big jump from just 11% in the same period last year, so almost double the contribution. And that growth is apparently driven by strong demand across their key markets.
And geographically, where are those sales happening? Still mostly domestic.
Predominantly, yes. The domestic market is still king, accounting for 94% of their sales volume in Q1. That's about 102,000 metric tons. Export sales made up the other 6%, around 6,400 tons. So a strong home base, but they do have that global reach, exporting to over 20 countries.
And they're using new tech to boost efficiency too, right? Something called DFT.
Yes, direct forming technology, or DFT. They've implemented this at their Mangaran facility. It's quite advanced.
What does it actually do? What's the benefit?
Well, it offers rollless forming. Basically, it lets them shape the steel into tubes without needing complex sets of rollers for every single size. This allows them to produce larger square sections up to 350 by 350 millimeters and rectangular ones up to 400 by 300 millimeters. And with thicker walls, up to 14 millimeters thick.
Rollless forming.
Yeah.
Sounds more flexible. What does that mean in practical terms for JTL's operations?
Big efficiency gains. DFT leads to about a 33% reduction in downtime because you're not spending as much time changing setups.
Okay, less stopping and starting.
Exactly.
Yeah.
And about a 25% drop in cost associated with that. Setups are much faster, no complex roll swaps needed. And importantly, it massively expanded their product range. Their SKUs went from around 1,200 to over 2,000 products.
Oh, nearly doubled their product catalog just from that tech.
Pretty much. Gives them much more flexibility to meet different customer needs.
And they're not stopping there with improvements. Their overall capacity expansion plans sound, well, huge.
They are incredibly ambitious. Right now, they have a cumulative capacity around 936,000 metric tons per year for pipes, plus 300,000 for backward integration, making their own raw materials.
And the goal.
Management wants to hit 1 million metric tons per annum capacity by the end of this fiscal year, FY25.
1 million tons. Okay, how are they getting there?
They're upgrading and adding lines everywhere. The Mandy plant's HR coil capacity, that's hot-rolled coil. The basic steel input, that's doubling to 10,000 tons a month by the end of FY26.
Doubling capacity there.
Yep. Then the Mangan plant, that's getting a huge boost. They're adding 300,000 tons per year of those high-grade API-compliant ERW pipes within the next year.
Okay.
Plus another 400,000 tons per year of GI coil, that's galvanized iron, by the third quarter of this fiscal year, FY26.
400,000.
And wait, there's more. A massive 600,000 tons per year of color-coded coil capacity planned by the first half of FY27.
600,000.
Yeah.
Good grief. What's the grand total capacity they're aiming for with all this?
If all these plans come through, they're aiming to bring their total tube manufacturing capacity to 2.25 million metric tons.
2.25 million tons. That's enormous scale. And it feels like it's timed perfectly to tap into India's big infrastructure push, right?
Absolutely. The demand for structural steel tubes, like the ones JTL makes, is fundamentally linked to government investment in infrastructure.
And that market is growing significantly.
Oh, yes. Projections show India's steel pipes market growing at a CAGR. That's the compound annual growth rate of over 8%, nearly 8.3%, between 2024 and 2033. It's expected to reach nearly 28 million tons by 2033. Globally, infrastructure already eats up over half of all ERW tube consumption. And in India, government projects have already driven big increases in tube usage for construction and pipelines.
And we're talking about massive projects driving this demand, aren't we? Things like affordable housing.
Huge potential there. That market's projected to grow from roughly $450 billion now to somewhere between $6 and $8 trillion by 2050. Massive long-term driver.
Trillion with a T. Wow. And then there's things like the railways.
Yep, the Indian Railways Amrit Bharat Station Scheme, that's investing nearly 25,000 crore to modernize 1,300 stations across the country. Lots of steel needed there.
And the Jal Jeevan mission for water. You mentioned JTL is involved there.
They are. It's a critical national project to get piped water to rural households. JTL is a key supplier, already provided 30,000 tons of GI pipes just for the Jammu and Kashmir part of the mission.
30,000 tons. Just for one region.
And that mission overall has already connected over 77% of rural homes to water. It's vital work.
And then you've got warehousing, airports, metro rail expansion.
All needing structural steel. India's metro network is set to become the second largest in the world. 3 new projects just approved, worth 31,000 crore. These are exactly the kinds of foundational projects JTL is positioned to supply.
So the market tailwinds seem very strong. What about the company's own strengths that let them capture this?
Well, they have several key competitive advantages. Firstly, they boast about being debt-free, which is a strong position.
Always good.
They operate in both primary and secondary steel markets, giving them flexibility. They have that backward integration, controlling some raw material supply. And they consistently achieve industry-leading EBITDA per ton, showing efficiency.
Okay.
Plus, all their factories can produce galvanized products, which are in high demand for durability. And they own significant land, giving them room for even more future growth.
And their physical footprint.
It's extensive. 5 modern manufacturing facilities spread across India, giving them a pan-India presence. And as we mentioned, that global reach too, exporting to over 20 countries on 5 continents. They're definitely playing on a bigger stage now.
So what's the outlook from management? What are they guiding for the near future?
They're reinforcing that ambition. The aim is to push the share of those value-added products, the VAPs, to over 40% of sales this year. That should help boost overall business performance and margins.
40% VAP. That's a significant shift.
It is, and they expect overall sales volume to grow by about 20 to 25% this fiscal year, FY25, compared to FY24.
Solid growth targets.
Yeah.
How are they funding all this massive expansion?
Good question. They recently successfully raised $6,750 million, that's 675 crore, through a preferential allotment to the promoters.
So funding from the main shareholders, not taking on external debt.
Exactly. It secures the capital needed for these big growth plans while maintaining that debt-free status.
And finally, it's worth touching on ESG, environment, social governance. Are they focusing on that?
They are highlighting it, yes. Increasingly adopting eco-friendly practices, focusing on energy efficiency in their plants, using more recycled materials, working on reducing carbon emissions, active waste management. And they mentioned setting up significant water conservation units at all their facilities, too.
Good to hear. So it seems like a pretty holistic approach they're taking.
Yes, it really does. From navigating the market cycle, showing strong operational numbers despite pressures, making these really interesting strategic bets like brass foil, driving efficiency with tech like DFT, and having this clear plan for massive expansion, all while keeping an eye on sustainability. It paints a picture of a company really trying to transform itself.
Okay, so let's try and wrap this up. To recap, we've seen JTL Industries Q1 FY26 results, strong operational growth, especially that record sales volume.
Right, even while navigating what they call a tough steel market down cycle.
Exactly. And then these strategic moves, venturing into ultra-thin brass foil, which is fascinating, while also doubling down on their core by expanding into high-margin API-grade pipes.
Plus, those massive capacity buildouts, fueled by that new capital injection from the promoters, it really does set the stage for what they want to achieve next.
Yeah, what really stands out to me is that dual strategy you mentioned.
Mm-hmm.
On one side, you have this highly specialized, almost R&D-like dive into brass foil for niche, high-value applications like defense, using that cautious job work model initially.
Right, testing and scaling carefully.
And on the other hand, pure industrial scale-up, pouring investment into advanced tech like DFT for their core steel pipe business to grab as much of that huge infrastructure demand as possible.
Exactly. It's this blend of, high precision specialization aiming for margins combined with massive scale aiming for market share and volume growth. It's quite a unique balancing act.
It really is. So as JTL Industries keeps trying to balance this traditional steel strength with these innovative ventures into advanced materials
Yeah.
and capturing demand from these huge government projects, it does raise a kind of provocative thought, doesn't it?
What are you thinking?
Well, what does this dynamic, diversified approach really mean for the future of companies providing building materials? Especially in a rapidly changing global economy like ours.
Good question.
And maybe, how might this kind of strategy branching out so deliberately beyond the core impact other industries that rely on these foundational materials? Could it push them to innovate in similar ways?
That's definitely something to think about, how diversification and specialization intersect in these core industries. Yeah, definitely something for you, the listener, to chew on as you continue your own deep dives.